What's going on, guys? Welcome back. We're taking a look at ARCBLOCK this morning. ARCBLOCK / Tether USDT Gate.io is the chart here. Going to use this chart for most of the ARCBLOCK videos as it has more price history. So we have a couple upper targets we'll talk about, and we'll talk about if those will hold, if those can be valid or not, and I'll tell you why in just a moment. Getting a pullback here, down 18% after a massive run, guys. So these pullbacks, pretty normal to see. So, I mean, this thing ran 400% off the last most recent low to the most recent high, and currently up where we're at now, 192. So massive move in just a couple days, guys. So sitting down 19.6%. So if we go left on the chart here, this is the Gate.io data, by the way. Today's candle wick, the lower part of the candle, found support at this high over here, which was the 10th of May, Friday the 10th. So that was old resistance, this major high over here where my arrow is pointing. Markets consolidated for a very long time and finally broke out. So to get a pullback back to what was a level of resistance, what you hope for and what you want to see in this uptrend, let's say it continues and continues to be healthy, is a pullback to that area, which is what took place so far today. So old resistance flips into support. So that's something to keep in mind. And that's just what the market did or is doing so far. Doesn't mean it's going to hold today. Found support, finding support, the candle hasn't closed yet, at an old area of resistance. Super basic TA. So that's something to think about as the markets pull back today. Down 18%, they're stopping at an area that is very normal to see, this level right here. Okay, let's move on to what's kind of happening right now. We have a major high that came in on the, so far anyways, 5th of November, 5th of February, that was Monday, a couple days ago. And we don't know if that's going to be broken again or if that's the high for now. Okay. So we have, if we go back to, let me try to get my tools here. We had a similar move, although not as violent, not as vertical to the upside. Something to keep in mind, guys, is markets don't go vertical forever. Okay. So they don't go straight up forever. They don't go straight down forever. They might go straight up for a period of time, and then they'll either have an equal or opposite reaction back to the downside, or they'll trade sideways. This right here, which is the 13th of December, big day, 64% day for this crypto. Then the markets traded sideways for weeks. Then we saw another move. So when markets make big moves higher or big moves lower, they need to digest those gains. Markets cannot move, or when they do move too much in one direction or the other, time needs to go by before another move will begin. So what we're seeing here, this 400, it's actually more than 400% rally in a very short period of time. If we get a sideways market for a couple weeks that doesn't sell off super hard, very normal. So you'll look back and be like, oh yeah, it looks just like this area that we saw here in November, December and January, not November. So anyways, keep in mind the first thing I said, which is where we're finding support which is at this high over here. Let's see here. This high, this level over here, which was back in 2019, May, roughly in May. Let's say today is the low. So these price levels won't hold, at least to the exact numbers I have on the screen, unless today is the low. If today isn't the low, or we continue to trade lower today, I should say, then these prices will change, and I will change them or remove them, one of the two. But let's take the scenario that today's low is in, and it is the low, and markets will either, not take out this low here or start to move higher, sideways. Whatever the case is, just not take out the low so far from today, which is 78,707. That's 78 cents on this Gate.io chart. We have two price targets above the market as targets and resistance levels for a period of time. $1.63 and $1.98. 163, 198. Those are right here in white. 163 would be first level I would look for the market to get to, have a reaction, and then, from there, we'll see what happens. Above that, $1.98. That's this white line on the chart. Keep in mind, if today's low doesn't hold, these prices are subject to change. But if the market does start to really move up from here, let's say, in a couple hours, markets turn around and start to rally, there is a chance that these prices will get hit next. 163, 198, not financial advice, guys. Always make your own financial decisions. I'm just a guy over here on YouTube sharing my thoughts on this market. 163, 198 puts the price up from where we're currently trading, which is at 88 cents. First target at 63 is about an 85% move. Next is a 126, 124 to 125, give or take, percent move from where we're currently trading at 88 cents to $1.63 or $1.98. I still have a target up there at 253. $2.53. That still holds valid. Whether it gets hit or not, it's anybody's guess. This might be the top for a while. There's a lot of hype coming in this thing. But hey, we've seen it move big in the past. Who knows? But the target's up there, 253. If the markets start to move up to that direction, I'll be looking for a reaction at that level, $2.53. And we'll continue to add price targets below and above the market as this thing continues to trade. And I do like this chart, the Gate.io chart, ARCBLOCK/Tether. And then, of course, we still have our all-time high price target, which will not change unless this thing really starts to rally and starts to get above basically the $2 range. If this thing starts to get above the $2 range, then I'll be able to change my $8 to $10. It's not going to change much, my $8 to $10 price target. But as this thing starts to make, new highs, this will change. But again, I still have that target up there at $8 to $10, and there's no guarantees that'll be hit. Something to take. Let's take a step back. So just how price is pulling back to this level, which was old resistance. Let's see if I can keep that arrow there. That level there. So that acted as the high for, let's see here, 1,700 days. A little bit more than that. Roughly 1,700 days. So that level, as it's getting tested now, should hold. It's taking a very long consolidation for that level to be reached again. It's taken years for that level to be reached again. Let's take a look over here at this high, which is back in 2018, I believe, March or so. When that level breaks, it could be a massive rally. Just like we saw this massive rally here, getting us up to this major high. When we get back up to these two major highs, they were both in May, right? Or no, that was in February or so. And then this one was in May. When the price gets back up to that area, we could see a very strong breakout. And that could really start to take you up to that, easily that $2.53 range. And then, maybe in a crazy scenario, we'll get up to that $8 to $10 range. It's a very valid, easily reachable price target, assuming this thing can break out and so on. Patience. When price moves too much in one direction or the other in a short period of time, you'll get a reaction. The best trends are the ones that rock on a 45-degree higher. Everything's the ebb and flow. Time and price are equal, and they start to move. When you start to get moves that go straight up or straight down, they're not sustainable, and there is not an ebb and flow. It's out of balance, and that's what we're seeing here. So we could see, like I said, this consolidation here was, a little over a month before we started to see a big move higher. This could be short-lived. Like today could be the bottom. I don't know. So far we have a nice candle wick below. But you could be out, until the middle or end of March before you start to see another big move higher. And looking back, that would be very normal. All right, guys. So $1.63, $1.98 are those two price targets if we can take out the most recent highs, and I still hold my $2.53 and then 8 to 10. And let's see how far this thing pulls back. Maybe the bottom's in. Thanks for watching.